Good evening to everyone present here today. We have our CEO and founder Dr. Mohit Batra and our CIO Mr. Sunil Damania with us today. The discussion would revolve around four key trends. Towards the end, we would also be having a Q&A session. Over to you, Mohit sir.
Thanks a lot. A very good evening to all of you. And today is a special day. I must tell you that MarketsMojo is celebrating its 8th anniversary. We are 8 years old today. We don't look 8 years old, but we are 8 years old. And all of this journey has been possible because of your unending support. You have been very loyal to MarketsMojo. You have been very supportive to MarketsMojo. I would like to dedicate our 8 years to our members, our Mojo professional members, our Infinity members. We would like to dedicate this 8-year tribute to all of our members who made this journey possible. We have done a lot of things, we assumed a lot of things, we went right a lot of places, we went wrong a lot of places, but such is a part of the journey that we embark on. We started in 2015 assuming that this product is going to be a very simple product, and we launched in 2016. With a lot of fanfare, we said that we've been able to crack two main things in the market, which is we will cover 100% of listed companies, and we will have a higher success rate than the market proclaims to have with 150, 200 companies. We achieved our first target in 2016. Both our numbers look very good. We covered all listed companies, and obviously we had a much better success rate than the market, which was the whole set of advisory services that were available with investment advisors or with brokers. Not ending it there, we then started the model portfolios, and we said, why don't we start recommending model portfolios to our clients, which they can look at, choose the risk appetite, and they start investing. That was a big service that we had thought. Initially, the model portfolio services used to be on the 4 dots. And then the big innovation that we did was we came out with a score, and we said that it makes it more easier for investors to straight look at the score rather than look at 4 dots and say, what stock they should pick on. We were very, very apprehensive on launching the score because it was really sticking our neck out, because I was depending on your interpretation of the 4 dots, and making a score and putting it as a strong sell or a strong buy is really sticking your neck out. Across 4,000 stocks is a very, very tough task and very difficult one that we had to cross. We knew that when you stick your neck out on 4,000 stocks, you will go right, you will go wrong, and we'll have to keep improving that whole process over a period of time. And we did work very hard on that. I must tell you that it has not been an easy journey. It has now been almost 5 years that we have worked relentlessly on making sure the score works for all the investors. Model portfolios, after that, score, and then we obviously launched InfinHub, which was in 2020, 2021, our effort on 21 markets. That initially worked very well, although that had subdued results out there, and our promise to revamp the product is going to be the next one that we are going to work on now. All the members who have taken our services for InfinHub will get a benefit. This is a promise from our side on the 8th anniversary that we'll make sure that you get a benefit on that particular product because you've been early subscribers to InfinHub. And come 2022, we launched our asset advisory business, which is Infinity, where we onboarded 2 portfolios, which is Infinity Soul and Power. These are the youngest portfolios that are in MarketsMojo's kitty today. We run close to 1,300 crores of assets on Infinity business, which is a large set of assets that we have been advising on over the last couple of years now. And as you know, we have just gotten into the mutual fund business, which was 6 months back for all our investors, and they can avail of the mutual fund advice and free transaction costs built into the product. And our next launch, which will happen in this month, will be the PMS business, which is where we are gunning for two portfolios, Infinity Power and Soul, but with a twist, with a much larger set of improvements that we are going to introduce, because it is a PMS offering, and we will open it up for Infinity users to see if they want to migrate onto these businesses. So starting from just a research service to advisory services to mutual fund distribution to now a PMS, and hopefully moving forward asset management company, a mutual fund, and much more, and international business. This has been a very, very fast paced journey for us. And as I said, none of this would have been possible if we didn't have continued support and encouragement from your side. You have been very encouraging. You have been critical to our business, which has helped us improve. You have been very graceful in terms of giving up compliments, which is positively motivated not just me, Sunil, but the whole MarketsMojo team. And on the 8th anniversary, I would like to thank all of you for the relentless support that you've given us. With that note, let me hand over to Sunil so that we can start our session on the future trends today.
Thanks a lot, Mohit. And we are 8 years young, not 8 years old. I think that's the way we should put it.
Yeah.
Okay, before I begin, just a small disclaimer that this webinar, I'm going to discuss about the trend, but remember this webinar is only for an education purpose. Please consult your financial advisor before buying and selling equity shares. Please note that whenever you buy in the equity market, it does carry a little higher amount of risk, and past performance should not be construed as an indicator for future returns. Now, I'm going to capture 4 things, and what I've realized is that I distinctly recollect, Maruti advertisement, kitna mileage deti hai, okay, and from that, we have seen the surge in demand for the utility vehicles in the country. They are not the best mileage, and country which was known for small cars and likes of Ford and likes of GM, they coming out on Tata Motors nano car. That was all bid to be a small car market. Everyone wanted to understand why India has been so popular with the small cars, because of the mileage in India is known for value for money kind of a market, and that's really a change in the last couple of years. So I'm going to cover that, and in fact I'm also going to cover we have now in passenger vehicles players only with the utility vehicles and how successful they have been. Number 2, the thought came to us, okay, FI have invested very heavily in the month of May. So what happens the next month? Do they extend that net buying, or they basically turn net sellers in the markets? So let's look at what happened historically. So at least we can take some cue. Of course, not necessarily what happened in the past can happen in the future, but at least we'll get an idea what should we expect, at least for the month of June, because in the month of May, FI have invested very heavily. The next trend is that since the March result season got over, how has India's performed for the year, not for the quarter, historically, and where do we stand based on the historical growth trend? Are we growing fast? Are we growing slow? And so on and so forth. And since 2000 rupee note is in, the issue is in demand, or is in the hot topic for the media and as well as for everyone, we have tried to understand what percentage of 2000 rupee note has been in the circulation for last couple of years, what percentage has been accounted historically, and whether what is happening with which is the note which is most in circulation as we speak. Of course, the data we have taken from the annual report of RBI that just got published a day before yesterday. So we are going to discuss all this thing as a trend, and of course, by Mohit's demand, positive and the negative trend, that's also part of this slide. So let me start with the rising share of utility vehicles. And I'm not going too much back in the history, starting with Maruti 800, but look at, if you remember, in India, we never had an SUV as a concept. The car that was popular was Padmini and the Ambassador. And then when Maruti launched with the car, not with the SUV. And And just in 5 years, I just want to explain you how the trend changes very fast. Sometimes we believe what worked in the past will work in the future. That's not the case been. Nano has been stopped producing because it could not ramp up despite 1 lakh rupee car. Did not happen. Only 28% of the four-wheeler that was been passenger vehicle been sold in FY 2018 were the SUVs or the utility vehicles, whatever you call it. Today that increased to 53%. In other words, of every 2-car passenger vehicle that have been sold in the country, 1 is a utility vehicle, and that's the kind of trend that is happening. In fact, there are some players who don't manufacture sedan only, okay, and yet they are very, very successful. Okay, and let's look at those who are actually. So what I've done, I've looked at last 2 years or so, from June 2021 till March 2023, how the market share has been increasing in the passenger vehicle, and you'll be surprised to know that the topmost, the two largest player, Maruti as well as Hyundai, have lost the market share. And who gained? Mahindra and Tata Motors. And what has come as a big surprise is that Kia, can you remember when did the Kia came to India? 2019. The first car they launched is in 2019. And today they control 7% market share in passenger vehicle. They don't have any small car or sedan in their portfolio. They are all utility vehicles. And you'll be surprised to know that today Kia has a much higher market share as compared to Toyota or Honda, who have been there in this country for many, many years. So that's the way the market share has stepped up. Maruti did improve its market share, and in the March quarter from 41% to 42%. Hyundai, Kia is a part of Hyundai globally, okay? But I'm talking about as a brand. It remained almost 14 kind of a stuff. It's been very, very constant. But I think Tata Motors did a brilliant job, and so is the case with Mahindra. Mahindra also don't have any sedan. They only utility vehicles, and they've seen the market share increasingly significantly. So that's what the trend is. And as I said, trend do reverses, and sometimes new players coming up with the new technology, new thought process, new design can create a problem for the incumbent players. And something similar will happen with the electrical vehicles. The reason I'm giving you this slide, just to give an understanding that as and when the electrical vehicle becomes a more of a mass product, you would see that some of the incumbent players will find it a little tough to protect their market share from the new players coming in. Now let's come to the topic which would be of interest of anyone. Kya hota hai next month? When FI did invest very heavily in the month of May, so what happens the next month? So what we have done, we rewinded, we went through the data of FI, and we look at the period or the month where FI invested more than 30,000 crore in a single month. What happens next month? And we are surprised to know that it has come as a surprise to me. Normally, there is a follow-up buying next month also from FI. What has come as a very, very big surprise that in the month of November 2020, if you look at it, FI put 60,358 crore. And the month of December, they again invested that kind of a money even in the next month. And not only that, they also invested in January 2021, 19,000 additional money. Out of the 7 instances that we have seen, only on 2 times the FI basically had a cash outflow rather than inflow the next month. What does this mean? Probability is very high that what we saw inflow of 43,000 crore coming in the month of May could get extended even in the month of June. So don't get little frightened. FI have invested so much. The third month in a row they've invested. Will they slow down or will they be negative? The trend doesn't suggest so. Now the third trend, the net profit growth of India Inc. Now if you look at it, 2018 has been disaster. We all know why, because of COVID, and did impact the profitability for the March quarter. But normally India has been growing, was growing at 20%. FY 2019 we grew at 20%. The profitability came down. And when I say March, what we have taken FY, we have taken September, December and the March, for the comparison purpose, because some companies do have accounting year, not March, but December or September, just to get a flavor of that. 2020 we declined, but 2021 and 2022 we saw a smart growth, 50 and 51. Of course, that really made the base little higher. And in FY 2023, we just concluded the recent season, we have grown at 13%. Now, what has come as a very good happy news is that, of course, the base is high, so we should not expect 20% kind of 50% kind of a growth year after year, which is not sustainable purely. And some of the reason why profitability has come down because of the metal pack or the commodity business did see some decline, and that normally whenever the commodity cycle is on the upturn, it does benefit India in terms of reporting smarter growth. But when the commodity cycle turns negative, it does impact, whether it's a steel, ferrous metal, non-ferrous metal, cement, and so on and so forth. What is happy news is that post-March 2023 numbers, there is no revision downward for the FY 2024 earnings growth. If you look at the consensus that is there in the market, they continue to believe, the experts continue to believe that we would still continue to grow even in double digit in FY 2024. India's GDP is expected to grow at 10.5%. If that is so, I think it should mimic very similar fashion in terms of the net profit growth. Now comes the famous, the hot topic of 2000 rupee note. I don't know how many people exchange. I have still not bothered to go and exchange the note. Even though I do have some notes, I'll go maybe Saturday tomorrow, or maybe I still have a time. But look at it. It's not that RBI has been very, very conscious of, in a way, reducing the 2000 rupee note from the circulation. And how do we do that? Look at 2021. 4.9 lakh crore were in circulation of 2000 rupee note, which came down to 4.28 lakh crore, sorry. And in March 2023, it came down to further to 3.62 lakh crore. In other words, there is a steady decline that is happening. Even if you look at as a percentage of total, which was near about 17% in 2021, it was near about 11-12% in FY 2023. So it is steadily declining, and 77% of the notes that are in circulation are of 500 rupee note. That's what. Otherwise, if you look at the 200 rupee note, it's almost very similar kind of what it was in FY 2020 to FY 2023. 100 rupee note seems to be very, very constant, and then the 50 and 200. In fact, I've been informed that nowadays the government, RBI stopped issuing 10 rupee note. It's only the coins that are available, and in some of the states like Tamil Nadu, people don't accept 10 rupees coin because they don't like it, becomes a little bulky. And I think some region of Gujarat also, they don't accept 10 rupee coin in the market. But anyway, they form a very small percentage of total money in the circulation. So 500 rupee note is a very substantial portion, accounting almost 77% of total circulation, notes in the circulation. Now coming to the positive trend, and I think one thing, despite that gloom and doom scenario that we are seeing across the world, people are fearing about recession in the US and so on and so forth, the GST collection has been very, very rock solid. So what I've tried to do is that I've tried to look at it, what is the Y-on-Y growth, not the absolute value, but the growth in the GST collection. Now it's a very important data for all of us to look at it. The reason why I'm saying so, this is my personal belief, is that India's GDP growth would be plus or 2 minus equivalent to the GST growth. Why? Because GST is a very powerful indicator which will help us to understand what's happening at the economy, broader economy level. And that's what is happening. So if you look at it, somewhere about 11 to 12%, 15% kind of a Y-on-Y growth we have been seeing in last 6 to 7 months. And of course, remember the base is becoming more and more higher and this is growing. So if you really wish to know what's going to happen with the GDP, please start tracking the GST collection, and that will give you a fair idea about what we should expect in terms of GDP growth. Government-based assumption for FY 2024 is 10.5% nominal GDP. I'm talking nominal GDP because GST is also nominal growth. So 10.5 is, I think, is the nominal GDP growth government has estimated in its budget document. And the way it has happened in the month of April and the May, I think we should be able to achieve that kind of a growth, or maybe overshoot also depend. Of course, just 2 months we need to wait and watch, but that's what it's saying. In terms of negative trend, I think the interest cost have gone up for the India Inc. If you look at 2021, 2022, we have seen decline in the India, and of course this number does not include banks and NBFCs because for them that's a raw material, and hence comparing them with that, it doesn't make sense. So we have removed that. The two reasons, each and every corporate starting from Reliance to the Hindalco, the likes of Aditya Birla Group companies and Tatas, everyone talked about deleveraging the balance sheet. But in 2023, the trend got reversed. Interest cost moved up by 13% for the India Inc. Two main reasons. First, the RBI hiked the rate of interest. A lot of working capital requirement was there, and that increased India Inc. cost by 16% or so. Now remember, there is no capex that is major capex that has been resulting into this interest cost going up. It's purely because of working capital, number one. Number two, servicing the same cost at the higher rate of interest, and that's the reason that has happened. For some reason, RBI decides to cut the rate, it will reflect in FY 2024 numbers. So the data will help you to understand how much leverage or how much leeway India has in terms of improving that net profit level without doing anything. At least if the interest costs come down, it can help to boost the earnings for the India Inc. What are the major news? I'm not going to spend too much time on that. You can see on the screen as I speak. But central government deficit got narrowed down to 6.4%. That's very happy news. The steel companies are going to import coking coal from the Russia. That will help them to reduce their import cost. For some reason, India's core sector saw a decline in the month of April, and crude oil from Russia has been increasing month after month, and now it's a record of 42% has come to 37% in April. If you look at FIIs, again the last week of May, they pumped in another 13,000 crore, and Sensex and Nifty remain almost the same level what it was there last week. But of course, mid and small cap did extremely well. We all know the GST collection has been very, very robust. That clearly suggests that underlying growth in the economy is very, very resilient despite global uncertainty. And one should expect some price increase for the minimum support price for the Kharif. And I think sugar, which has been a very most weighted for quite some time, I think government has not done any price increase. I think there is a huge need to increase the MSP for the sugar prices. With this, I'll hand it over to Mohit before we open the floor for question answer.
Thanks a lot, Sunil. 8th anniversary of MarketsMojo, and we wanted to do something special for all of you. There are two things that we are going to do. One is we have been running, this is maybe 1,157th, 8th webinar that we've done with you. Over 1,000. We crossed over 1,100 webinars that we've done over the last 3 years. As you know, that display of content to you looks easy. Making of the content and putting our thoughts together takes a lot of time. We've been noticing that at 7 o'clock, when we every day do a webinar, as we were doing in the COVID times, the attendance to the webinar has consistently dropped because obviously you are on your travel time returning back from office. So we are doing an experiment on Monday and seeing whether that time slot is important to you. We will do a breakfast series at 7:30 on Monday with Mojo Stocks. And that would be a half an hour series. So if you can spare time for half an hour in the morning before you start your day, before the market starts, that is what we are trying. We will also send you a questionnaire. This questionnaire will ask you your preferences of time, your preferences of days, your preferences of topics, and various other things that will help us better customize these webinars so that we can reach out to many more of you, people who cannot attend maybe due to this inconvenient time. But our objective is to be in touch with all our investors so that this knowledge the level is kept up and not disseminated, because as I've told you before that your salaries, your earnings may not grow at 12-15%, but markets can grow. So this is equally taken as an important way to grow your wealth rather than just growing our income, which is the compounding that you will not see towards the end of your life. The compounding comes only from growing your wealth. So this is more important, and we want to customize ourselves to make sure that we reach out to more of you. And we are starting that experiment on Monday with Mojo Stocks as 7:30 in the morning, breakfast, Mojo Stocks for half an hour. It will be a quick half an hour thing. We don't want to make a 1 hour episode out there, but we will try and do this. Number two, in various such events like last anniversary or Diwali time and all the stuff, whatever you've seen that the prices of MarketsMojo has gone up to around 26,999 on the site. A lot of our members had taken memberships at various points of low prices. So when we were coming on to this particular 8th anniversary, and when we were thinking about what kind of a price benefit we can give to our investors, we decided to do the following. What is the lowest price that you paid to MarketsMojo Premium? To our professional services, what was the lowest price? Because a lot of times you've said that, listen, my extension is limited because the prices have increased. I bought MarketsMojo at an X price, now it is at this price. You would not imagine what we have done this year. What we have done this year is we've gone back, we've checked your accounts, and we've figured out what was, which year, which date you bought MarketsMojo at the lowest price, and that becomes your offer for this year. There is nothing better that we have done over the last 8 years for our MarketsMojo professional members. Any offer that we do will be inflation adjusted offers, because upward adjusted, because we've increased the price gradually over a period of time, and a lot of our members miss out. And this time, for a very, very limited period, what we have done is given you a benefit to go back. Just, you don't have to look at it. In the next 1 hour, your banners on your site will be up. You will also get a mail that this was, say for example, on 1st of June 2019, you bought MarketsMojo at the lowest price, and whatever that price is, you will be eligible to renew it or extend your subscriptions with that price. I think no company has ever gone back in history and done this. Most of the companies increase price, we've also increases prices, but we've not gone and given the benefit to our loyal MarketsMojo members to say whatever was the lowest, take it at the lowest and extend for a very limited period before the price again goes up to 26,999 and maybe more than that as we launch more features. So make sure that this offer should not be ignored. You could have ignored any offer before, but this offer should not be ignored, because this is a benefit that you've got 2 years back and you're getting the lowest benefit again to you. If you don't know what was the lowest package, we will send you a mail after this webinar. We will also put a banner on your login when you log into MarketsMojo, which will show you that on this date, this was the price that you paid and you can extend it at your own price. So your lowest is our lowest this particular anniversary. With that note, let's open the session for Q&A.
So, Mohit, as a technical question, can I extend subscription more than once?
You can extend it more than once. You can extend it if you bought it at ridiculously cheap prices. You can extend it for 5 years also, 10 years also.
Okay.
So you can extend it as much as you want.
Okay.
So this first question for today is from Mr. Samir. Will Amazon entering telecom eventually disrupt Indian telecom industry as well?
With?
I don't think so. Anybody destroys any industry. There is always a scope for players. So I don't think so there is a risk out there. I think telecom players in India are very seasoned. They're very old. They know the market game. And I personally feel that the price war is something that that's the only thing they have been fighting since the time they came into business. So a simple price war may not result in any this thing. Our tariff rates in India are one of the lowest, or rather the lowest in the world, if I can say that. So I don't think so a price war will happen out here. I personally feel that there is a lot of scope for growth within the Indian markets, and I don't think so. They may turn out to be a good and a major player, but I don't think so it's going to disrupt the industry.
So, I am not aware, Samirji, where did you read this, that Amazon is entering the telecom? You need a license, am I right? And I don't think government will be issuing any license to. Then once is a license, second thing, you need to give a spectrum to launch a service. So, if at all Amazon wants to go in the telecom, I think first, they need some other infrastructure too, and it's not going to happen in 1 month, 1 year or so. I think it's a little long term. And if at all they decide to enter, maybe there is available player available in the market that could be the potential candidate. Why? Because it comes with the spectrum, it comes with the customer base, it comes with the basic infrastructure and so on and so forth. We need to wait and watch. In fact, there was some rumor some time back that one prominent business house was getting some interest in one idea, and then that group went into a problem because of corporate governance and so on and so forth, and that topic died. But if at all Amazon decides, and Amazon globally is not into telecom, so I'm not very sure.
Yeah, I don't know why they will start with
They
India.
will start in India. So I think we need to really look at where does this strategy fits into, because and we know that the telecom has been in a graveyard, not only for the some of the best business houses in the country, including Tata. The amount of money they lost because, and the kind of reputation that they ran into because of that Nira Radia case and so on and so forth. I think it's been really, Videocon group lost a very big amount of money and so on and so forth. Anil Ambani group lost big amount of money in telecom. So I think before someone coming in, I think it's going to be a little this one. And if you look at globally also, I think telecom as a sector has been little case burner. So I don't know why someone would, and Amazon is known for entering into businesses which are path breaking, which are tech oriented and so on and so forth. So I doubt, sir. But anyway, if you have information and this, even if they decide to enter, it will be a little long term. It's not going to impact the players in the near term.
So this next question is from Mr. Krutwik. I feel lost in trying to understand the macroeconomics and also how it affects specific sectors. Can you suggest a way for me to get a comprehensive understanding of this matter for better investing?
Krutik, it's a very complex thing. You're right, absolutely. It's not an easy thing to understand the macroeconomic factors that then further affects the sectoral factors, and then further affects market cap sometimes, and also affects the companies, right? So it is a tough one to crack. Now, broadly speaking, if you look at main parameters, I think across 20-25 main parameters, you can look at the possible impact on sectors. You can look at the correlation of those factors on various sectors. You can then also look at cross correlation within the sectors, which is, for example, a particular sector goes up, then does the other sector go down, or the other sector goes up? So it's a very, very complex web of information. I don't know why and how this question came in, but we are currently in the process of decoding the sectors which we are trying to use to better our scores. So, get into a stock which is in the emerging sector or in the right sector is the theme that we have been working on for almost a month now, Sunil.
Yeah.
And we are reaching closer somewhere. We are still far. But to give you it's not a simple answer, but it's a very, very complex thing. As you know, there are two ways of investing, which is top down and bottoms up. We started with a bottoms up approach, which is stock. So I may buy a stock irrespective of the sector and irrespective of what's happening in the sector. We have tried that for 7 years now. And now we have gone one layer up and said that, okay, can we now look at the sector per se and say that if the sector is good, which stock to pick within the sector, right? And what sector we should avoid, can we adjust it in the score, and so on and so forth. And third layering would be, which is the final layering, which may happen in the next maybe 2 or 3 years, is then to include the macroeconomic factors out there. So not an easy answer, but I think stay with MarketsMojo. We are also trying to find the same one.
So this next question is from Mr. Mohanty. How do you see the prospect of metal sector in the next 6 months?
Mohanty sir, I think, I know you are from the ex-Tata Steel, so you'll be a little excited to know. See, I think the metal prices have come down very drastically. And we did, I think, in last Friday or one before last Friday, and we did mention about how the metal prices have been coming off very significant. One of the reasons has been that China, which was supposed to grow post lifting of the lockdown, did not happen. That it continues to struggle in terms of growth, and so on and so forth. I think it's all function of what's going to happen with the China. And if China continues to remain a little soft in terms of the demand outlook, I think metal prices will be a little subdued. I know we see some upward movement in the metal prices today and yesterday. I think that's the reason you are asking that question. But my sense is that till China does not bounce back economy, I think it's going to remain a little challenging for metal prices to remain a little higher. Within that metal, so I think, so short-term outlook is a little challenging. So you mentioned about 6 months. So I wouldn't like to basically venture out and say for 6 months, because that's a too short a period and probability of you going wrong is very, very high. So while the short-term outlook looks a little difficult for metal, I think the medium to long-term looks extremely promising. And the reason I'll explain you why. I think the climatic, the global warming is a reality. We all understand, and everyone is talking about how do we basically reduce global warming. And one of the best ways is to invest in a green energy. And once you start doing that, I think a lot of non-ferrous metal and so on and so forth will be required to invest in the green energy, and that could spur a growth for this one. Number one. Number two, if for some reason if the rate of interest has to start softening, and that's what the expectation is that Fed would do by end of December 2023, and if that happens, again we could see some capex cycle coming back, and if that happens, again it would call for more demand for the metal. So I think the medium to long term looks a little promising. Short term is a little cloudy purely because of no one has a handle on what's happening in China.
So this next question is from Mr. Jain. What is the view on defense sector? Are we really ready to compete with the global giants?
Jain sir, we clearly believe that defense is one sector that could see a multi-years growth in the years to come, purely because the government of India has been putting a lot of focus on making India's defense modern and Atmanirbhar. Second thing, India is exporting and will be exporting a lot of defense from to some of our countries where we have a very good relationship. If you happen to listen to the Bharat Electronics management giving interview to the CNBC post result, they mention very similarly. If you happen to listen to some of the defense related companies owned by the government of India, and if you happen to listen to the con call, they have been saying that they are also looking at export as a theme to drive their top line and the bottom line. So I think this is one sector which seems to be recession free. Whether what happens to the economy, what happens to the global growth and so on and so forth, I think defense as a segment we'll see keep spending, we'll see keep increasing the budget, not only from India but across the world. And India, who knows, could be the, India, if you just go back 10 years back, India was the largest importer. India used to import mobile phones. Today, India is exporting mobile phones. Am I right? And maybe, who knows, in next couple of years, 25% of the Apple global supply would come from India. Same way, defense can happen in next 5 to 7 years. So we are extremely bullish. That's my personal opinion, not MarketsMojo opinion. Defense as a sector looks extremely promising, and in fact, all you have a defense stocks in your portfolio, I think one should definitely play out as a long-term play on this. That's what my sense is. Mohit, you have any opinion?
No, I fully agree with that.
So this next question is from Mr. Manoj. I don't believe in any research company. How can I believe Mojo? Please reply.
Well, your starting statement is you don't believe in any research company. So if you don't believe in research, then then I think you should see that minus the research, what kind of wealth you've been able to create. And if that is substantial, you should continue to not believe in research companies. We are extremely transparent in our performance. If you go to Mojo Stocks, and within Mojo Stocks, you have our track record. And this is a track record. This is not a selective track record where we only show positive calls. We show all the calls where we've gone right, all the calls we've gone wrong since inception. So you are free to please go there and look at our track record, and then decide for yourself whether you should be trusting a research company or not. I don't have view on other research houses. I think the only view that we have is we are observing the value of research every day in our own lives. We are observing that getting into a high quality stock, which is typically in rising momentum today, as the right price, has a good valuation, is the best way to fundamentally build up your position in the market, whether at a portfolio level or at a stock level. And I think sooner or later we have realized that that is the only and the best way to build up your wealth. Now, as I said, we don't do derivative calls. We don't do any kind of projective analysis. We don't do any kind of giving you trading calls, which is something that we have a separate product, but that is not a part of MarketsMojo per se. It is a trading 80 product for people who want to trade. But we don't do any speculative calling. We are purely fundamental in our approach. I think more than research houses, there are two things that go wrong with investors. It is not the research houses, I'm sorry to say, but it is the emotions, the discipline and patience of investors that kill their whole wealth. It is not the research houses, because they are doing their best to come out with calls that they feel will work well after a very, very detailed analysis, as you are seeing out here. And you can go into any research platform, I'm sure they will also show their track record. You can even see MarketsMojo's track record on the site.
So this next question is from Mr. Nikhil. What will happen to Infinity Power investors whose value is lesser than 50 lakh? Will they be included in PMS, or will they get a chance to continue with Infinity Power portfolio?
Sir, Infinity Power and Infinity Soul portfolio will continue as is. Nothing gets disturbed for any investor who's less than 50 lakhs. So you can continue your journey. There is zero impact on your journey with the launch of the PMS business. One thing that a lot of investors who move towards PMS get confused about is 50 lakhs is at a company level, it's not at a scheme level. So even for investors who have maybe 20-25 lakhs in PMS and in Soul and in Power, we look at a client level. So if together you have 50 lakhs, then you can still move on to the PMS business, where you can put 20-25 lakhs or 30 lakhs in one portfolio and 20 lakhs in the other. The total should be 50 lakhs. But having said that, if that is not the case, Infinity Power and Infinity Soul will continue as is for its life. There is nothing to worry about. There is no compulsion for anybody to shift on to PMS, whether it is a less than 50 lakh client or more than 50 lakh client for that matter. You can continue your journeys out there. PMS is a choice that you have to make. Some of the reasons that we are doing PMS is that it gives us a better control to lower down your impact cost. See, as I told you that last year, when there was a lot of volatility in the market, and by the time we tell you to buy or sell something, we saw that customers, when they input their prices on the Infinity platform, there was a 5 to 7% higher or lower than our suggested prices, which is impact cost as we call it, right? So if you just add that 5-7% in your portfolio returns, that is the kind of decision making impact that was there. So PMS takes care of that because we do the execution on your behalf. That's number one. Number two is the discipline. A lot of times our investors don't listen to our calls. They will regenerate a portfolio. Nahi, ye stock acha nahi lagta hai. No, I want to have a different stock and all that. So those kind of, that emotions that you carry because of your preconceived view on a stock goes away, because I don't have that emotional attachment to a stock when I'm looking at allocating on a client basis. So the approach is much more disciplined. Execution is real time, because if you're traveling tomorrow for 3-4 days and you miss executing a call, that is also discipline. And obviously what we are going to do is that we are going to put another layer on PMS, because we are expecting a much larger asset base out there. So we are going to play with the strategy a little bit to make it much more wider in its own approach. So those kind of, there's a differentiation in strategy, there's a differentiation in execution, the timely discipline of making sure that you don't let your emotions come in play, you're sitting on cash, sometimes you're not sitting. So all of those goes away with the PMS, because that's where the discipline comes from our side. So, but to answer your question in short, you will continue to be a member of Infinity Power or Soul if your assets are less than 50 lakhs.
So this next question is from Mr. Sushil. Sir, what's your view on pharma sector in the year 2023 and 24? After listening con calls of Q4 2023, many pharma companies promise for the best result in the coming year.
So I think if you remember when we did that equity outlook webinar in January 2023, we did mention that pharma looks as a dark horse. And we continue to believe. Reason is very simple. I think a lot of pharma companies did face a lot of headwinds because of what's happening in the US generic prices that was coming at a present and started stabilizing, number one. Number two, I think the domestic pharmaceutical business continues to remain very growing double digit month after month. So that's another thing. And number three, the valuations of the pharmaceutical company has been very reasonable, because they kept on increasing their profitability, but the market cap did not move in tandem with that profitability and made that making valuation. And as you rightly said, many pharma companies did come out with a good set of numbers with equally promising outlook going forward. See, we must also remember that some of the companies who could not execute their strategy of generic in the US, they've started taking a back step, and that also reduced some amount of competition coming in that. So overall, pharma as a pack looks extremely promising. It is a dark horse which we believe should be able to outperform. But remember that you need to be little stock specific, because some of the companies within the pharma may not be able to do well. In fact, there is some concern that we do have on some of the companies within the pharma pack in terms of corporate governance issue. And hence, if you happen to be in the wrong company, which has some cloud on corporate governance, you could, while the pharma may do very well, that company that we are referring to may not do well, and hence it could result into a deterioration. So be careful. But yes, pharma as a pick looking very promising to us.
So this next question is from Mr. Arnab. What's your view on small cap in this year?
I think again we were a little contra in 2023, and that time we were looking like a fool. Why? Because 2022 the complete small cap and mid cap underperformed very significantly, and we said okay, we went against the grain and said okay, the year 2023 will belong to mid and small cap. Now if you look at it in first 5 months, while the mid and small cap has gone up by 7% or so, the large cap, that is Sensex and Nifty, has gone up by only 2-3%. So they've outperformed. The beauty is this, that while we do understand that it has outperformed mid and small cap, but the difference is not so huge between the large and the mid cap. In the second half of 2023, we believe that gap will further widen, where mid and small cap will perform much higher and much better as compared to the large cap. And that's where, we have been advising through our blog, we have been advising through our webinar, clearly stating that please, in case if you have a money in your portfolio, with you, and if you can stomach high volatility, please increase your allocation to the mid and small cap. Why? Because probability of them doing very well is very, very high. So our extremely bullish on mid and small cap pack, and we believe that they could generate a lot of alpha for the investors.
So this next question is from Mr. Harnish. What are your views on REITs market in India? Given the rapid infrastructure growth, is it expected to do much better than other developed countries? Should we invest in REITs for diversification? And how much weight should be given to REITs in portfolio?
So Harnish, Matab, it's not REITs, it's a REIT. So REIT is nothing but a real estate investment trust. And very recently one Nexus came out with an IPO on that 3-4. If you look at the track record, I think that's been not so great. So REIT are more like a, see in India, the REIT is allowed only with the commercial property, not allowed with the residential yet. And as a REIT, you can't basically invest in under construction real estate company to invest. So it's more of a play on the lease rental that the company will earn income, which in turn would get distributed to the unit holders, and that's how it works. It's more of a dividend kind of a play than the kind of a capital appreciation play. And somehow some of the listed company in REIT has not created wealth. My sense, my personal opinion is very, very clear cut. If you're coming to the equity market, you should chase capital appreciation, not the dividend. Why? Because what you make in dividend, if it get lost in the capital depreciation, then net you are nowhere. Am I right? And my sense is that REIT as a concept is still yet to evolve. It's yet to take off. And remember, when you invest in REIT, your long-term capital gain kicks in from 3 years, not from 1 year. So in other words, that's another disadvantage as an investor you would have. So yeah, I do understand that the outlook is extremely promising, but will that extremely promising outlook will result into a capital appreciation for the investors? Answer looks little, doesn't look very promising. So my advice would be stay away.
Yeah, you also need to know the construct of the REIT that you're investing in, because predominantly if you are looking at a rental yield kind of a yield, REIT, rental yields in India are one of the lowest. So it will become a single digit play. So you have to be very careful when you look at the REIT, know the underlying that you're investing in. And as Sunil rightly pointed out, that it's more of a dividend play than anything else. And I think if you were to even play dividend play, then I would look at higher dividend paying out companies in India, which is on the listed space, because there is also a possibility of price appreciation. So I would supplement that a REIT kind of underlying with high quality companies which pay out regular dividends, and I think that's where I can get capital appreciation as well as dividend yield taken together.
So this next question is from Mr. Swapnil. What is your opinion on Coal India share? Any particular reason that non-retailers showed interests in the OFS?
So Swapnil ji, I think if you look at all the OFS, it is only the non-retail investors who will show interest, not the retail investor. And I think the logic is very simple. They may be holding in the portfolio. In OFS, we are getting at a cheaper price. So you sell right now in the secondary market, you apply there, and you get that 5-6% yield, and that's how you basically make. So that's kind of yield that they basically vouch for. So that's the thing. Coal India continues to remain our mojo stock. We suggest you continue to hold Coal India. The company did see some price increase, wage increase, in the because it's one of the largest employer in the country for your information, Coal India, and their labor bill is very, very huge, So that revision took place. Now they are saying that they will be able to mitigate that impact of that higher wage cost by increasing some of the premium coal prices, and that they will be able to do that. Coal prices globally has been coming down, but in India, anyway, the price is a little lower. Coal India will get that advantage there. So right now, the Coal India, if you bought it, please continue to hold Coal India. That's what my opinion would be.
So that's it with the Q&A session today, sir.
All right. Just to remind you again, 8th anniversary for people who signed in late, 8th anniversary offer is a very unique one where we are giving your lowest offer as our offer, which basically means that in the last 3, 4, 5, whenever you've taken MarketsMojo membership, the lowest price at which you took, on any date, the lowest price that you took will become your offer. The same offer, so every user may have a different offer out here. Every member may get a different offer. We are putting that in an email and sending it out to you, and you will also be able to see your offer online on the site itself. With that note, and again, thanking you all for your support for our 8th year. As I said, and I genuinely mean, this journey would not have happened without the undenting support from our MarketsMojo professional members, Infinity members. Thank you so much.
Thanks a lot.
Thanks a lot everyone for attending today's event. Don't miss out tomorrow's webinar at 7 p.m. where Product Manager Jason D'Souza will cover all the basics you need while investing, from researching a stock in depth to selecting a Mojo stock. We will shortly send the invites for the same. Thank you and have a great weekend.